Hey everybody, I'm Mike DeCepoli and welcome to episode 60 of the Ask the Advisor Show. Today I'd like to discuss with you the biggest blunder that we see investors making in their portfolios right now. But before we tell you about what that blunder is, I want to put this in the frame of some context so you understand why people are making this mistake. Over the last couple weeks in the stock market, we saw the equity markets undergo what we call a stock market correction, which is a pullback from recent all-time highs. And anytime you see the market start to head south in a very rapid pace, it drives fear, it drives panic, and unfortunately it causes investors to take actions in their portfolio that they may not otherwise take. So anytime we see heightened times of fear and panic, investors tend to search for what they consider to be safe assets to put in their portfolio. We call this the flight to safety, right? People are scared, their portfolios are dropping, so they're looking for something safe to put in the portfolio. And this is where the big blunder comes in that we see everybody making. For the last 20 or 30 years, investors have associated safe assets or a safe asset class as bonds, right? Because over 30 years, we've never really seen bonds have a bad year. They've continued to move up in price. They pay you income as you go, and they present as being very stable and very safe investments. What most investors don't understand is bonds do not present any types of guarantees to protect your capital, to protect your income. So just because investors have seen bonds act a certain way for the past 30 years, they've gotten used to the fact that they think this is the norm and this is how bonds will always act. So this is where the blunder comes in. Investors are pushing their money, pushing their cash into bonds and bond funds because they see them as a safe asset class, but they're really not sure about what the risks are that are associated with bonds. So let me tell you what they are. One thing people need to understand about bonds is bond prices have an inverse relationship with interest rates. So for the last 30 years, interest rates were falling, and that is what caused bond prices to rise. However, where we're at today in 2018, we're in an environment where interest rates are beginning to rise, and it's been telegraphed by the Federal Reserve. They've told us how many times they're going to raise interest rates in 2018, 2019, 2020, and beyond. So if we know interest rates will rise, that we also know that bond prices will fall. But the average investor is not aware of this because they're really not sure how bonds should act in different economic cycles and different market cycles. And again, they've gotten so used to how bonds have acted for the past 25, 30 years that they just don't foresee the fact that bonds can ever lose value. So this is the biggest blunder we see investors making in their portfolios right now. This is why it's extremely important that you have a plan, that you have a portfolio strategy, something that keeps you grounded during the tough times. It takes the emotion out of the process, and you're able to continue to pursue your goals and objectives. So if you know anybody out there that is overweight in bonds, they own way too many bonds or bond funds, mutual funds particularly, that's somebody we would love to talk to. Obviously, they may not even realize the risk that they're taking in their portfolios. If you know somebody who's heavily invested with bonds, please tag them in the comments below, share this video with them, because we want to make sure every investor out there is well taken care of. Thank you guys so much for tuning in. We'll see you back next week for episode 61 of the Ask the Advisor Show.